Good day, guys. Welcome to Forex Walker. Welcome to episode 66. Now, on the previous episodes, we talked about our liquidation of the pound on the euro pound trade that we had. This is the daily time frame. So, the reason why we had to liquidate the pound trades is the euro pound sells is because the pound was pricing in some sales into the market uh, in the macroeconomic reports. So we had to liquidate the profits that we made from up here. In fact, this trade actually took longer to materialize because when we got to the 50% FEEP here, this is, I hope you can see down here, it says on the apron that it was Thursday, the 31st of July 2025. So we got to, in price action, we got to the 50% FEEP, and the market went to the previous shoulder here, it rejected. So we sold this part, and the market proceeded, instead of going all the way down there, it proceeded to keep moving higher. And we also tried to hold it from here. I think it was the 25th of September on the apron down here, the 26th of September 2025, where we sold the euro pound, believing that it is supposed to be coming back from the high that we have here. So we sold it. This is part of the reason why I always say I don't trust the euro. Uh, when I say I don't trust the euro, it does not mean I don't trade the euro. It's because the interest rates on the euro are low. However, the currency does not want to sell because the macroeconomic reports always appear positive, and it makes it difficult to sell the euro. And the disadvantage that I have is that the broker that I use uh, is specifying the currency pairs that I should trade, even though I'm a carry trader. Remember, being a carry trader provides you a broad aspect of many other trade currencies. In fact, it gives you separate currencies that you monitor in the macroeconomic realm, and at a point where you were supposed to be choosing your own currency pairs that you can match together and trade. So sometimes it looks like we are not doing well in our trading, but it helps to explore other uh, it helps to explore other brokers and see what kind of currency pairs you can get from separate brokers. And for a carry trader, it would really help to have at least three separate brokers so that you don't lag on your trading because you're being forced to use one specific currency pair, which is totally unfair. So here we had to liquidate the short euro pound trade that we had, and because the pound was pricing in some sells. Remember, I'm talking about some sells, but we are moving upwards. So when you buy the pound in a euro pound trade, you need to sell the pair, the euro pound. You need to sell it. That means you are actually selling the euro and buying the pound. So here it looks like the euro is getting stronger, but the euro is not getting stronger. It is the pound that is getting weaker. The pound is pricing in some sells. So that's the reason why we had to liquidate, and hence we got the spike here that looks to us that the for a price action trader, they will tell you that the euro is getting stronger, but it's not the euro, it's actually the pound getting weaker. So this is a level where we were looking to break. Let me show you something. We were looking to break below the previous lows here. As you can see here, we went to the 50% fib and we went all the way up to the previous shoulder. We expected to break below this low, which we did. Unfortunately, the pullback that I expected to break the previous low here, it didn't. So it went all the way up there, and we expected this level to break this low. We expected to go all the way down here and break this low and give us another pullback and continue moving lower. But because the pound was pricing in some sells macroeconomically, we had to liquidate the trade and see what it does. So that is on one of my previous episodes. I don't really remember what that episode is. So this is the pound SGD that we had, and uh, remember here when we buy the pound, we are moving upwards. So right now, because the pound is pricing in some sells, that's the reason why you have this drop here. Remember when I talked about on this weekly time frame channel, this is the daily. On the weekly time frame channel, we talked about the first touch, the second touch, and we expected the third touch to manipulate. It was here, but it didn't manipulate. It moved up there because the pound was pricing in some positive economic reports, and the market actually came back to do exactly what I was looking for, which is our first touch, second touch, and the third touch manipulates. This. Let me change the color on this line so that you can see it properly. Let's turn it into what, blue? No, blue is not good because I changed some of my candlesticks. Let's see. I changed my candlesticks to give you a specific color. Now it matches the 50% fib. Let me change the color again to, let's see, purple. No, not purple. I don't know what I'm doing here, but let's just change it to white. It doesn't match anything. So this is our first touch, our second touch. Remember, we're trying to hold the rally base rally. The rally being this bullish move from here all the way up here, and the base, which is the sideways move, and the next rally, which is the replica of what you see here. So we're trying to see at a distance from here up here, we're trying to see the replica of it happening up here after the market manipulation that we're talking about here. We're trying to find something like this. So this is this rally that is replicated from here. That's what we're trying to find. So we had our first touch, second touch, the third touch manipulates, which it did when the pound priced in some sells. And this is where the pound is looking to turn around, but macroeconomics is not telling me that the pound is turning around, so I will not participate in this trade, even though we have a positive move in the global supply chain and we are moving towards the closure of the year. I'm supposed to be holding it, but I'm unfortunately I'm a carry trader, and I'm an arbitrage trader. I look a lot into macroeconomics. So even though it is telling me price action wise that it is rejecting and is about to be moving up there, I'm not going to take this trade based on that because that is not a macroeconomic report. So I will be waiting until my macroeconomic reports are introduced, the economic reports that I'm looking. In fact, at the moment, I would be expecting the pound to move all the way down there, which is something unusual, but especially because of the price action move that you see here. But I'm not expecting the pound to, okay, it might give us some kind of a pullback. At the moment, I will be sideways on the pound, but it might as well go all the way down there because macroeconomics is pricing in bearish economic reports on the pound. So that's the reason why I'm not looking to buy it, even though macroeconomics says maybe you should just buy it. You should No, I'm not doing that. That's not how I trade. That's the unfortunate part about what I do. I I need to look into macroeconomics, and I cannot say here we have rejection. Now we need to start buying the pound. I cannot do that, unfortunately, because I trade macroeconomic reports, and if the macroeconomic reports do not fit my criteria, then I'm not going to take that trade based on what I see. So this is just something that I needed to show you guys. I have something else that I need to show you quick. So here, the United States, the Fed decided to introduce a 25 basis points interest rate cut. Here it says September on the apron that you see here. It says 17th of September 2025, they introduced a 25 basis points interest rate cut from 4.5 to 4.25. And here they introduced another 25 basis points interest rate cut. Now, this is specifically directed to the those commodity currency traders. They call it gold. Let me check gold for you and show you exactly how you should take this baby. This is silver. Remember, I look more into uh, carry trades. So that thing happened quite a long time ago, but I saw it before, and I had to hold a buy trade on. This is silver USD. So I had to hold a long trade. This trade will actually take because of the interest rate cutting cycle. I don't know how other people trade uh, commodities, but this is how I trade commodities. So after this, we're going to have something that is similar to this. The previous entry was somewhere, I believe, somewhere down here on the previous entry. Look what it says. It says 14th of May or the 15th of May 2025. Look at how parabolic that move is. Now we're going to find another parabolic move like this from here. This is what you will see out of what we are doing here. Remember, gold is traded in US dollars, and when you see when those interest rate cuts are introduced on gold, what will happen is that lower interest rates make money cheaper. It makes most commodities affordable, and a lot of investors are going to buy those commodities because the prices are lower based on the interest rate cuts. So it makes money cheaper, and it makes gold, it brings more demand on gold. And that's the reason why I'm telling you that on the previous entry that I made, having this parabolic move, we're going to have something similar to this. A replica of this will be visible here. Remember, uh, we're moving towards the closure of the year, and this will be the last kick. Or, for example, those who say they trade, what do they call it? The Elliott wave. This looks to me as this was the first wave, and this becomes the third wave. The first wave, the second being the pullback, and this looks like the third wave, which will be mostly bigger than what you see here. So that's what I will be looking into. I'll be holding this trade for the longest time, especially because we are moving towards uh, the positive interest rates in the silver US dollar trade. And once we get that positive carry, we'll continue holding this trade for the next 3 years. Thank you guys. I will see you on the next episode. Goodbye.